Hey everyone, welcome. Good to see you all. Hope you guys had a good day. We had a little bit of excitement in the markets today where we gapped down and then recovered to the EMA 8, but that proved to be resistance and we traded back down to the EMA 20. So basically spanning the EMA 20 and the EMA 8 today. Now in the Telegram channel, we talked about how in the morning, the gamma levels were showing that the calls were in control in the morning, indicating 680 was a target level, or that was the highest exposure level for the market makers, and that would be somewhere where they would be forced to participate if there was a move higher, and then from there could be a sell-off. So I said 680 seems very likely, then we'll have to see for what happens from there. And basically we hit 679.96 within 4 cents, and what happened from there was a rejection of that and came straight down. So that one we did very well, and Gamma was a very, very helpful tool in predicting exactly that level and what might happen from there. So I believe tomorrow, maybe for the next few days, in the Telegram channel, I'm going to be doing some zero DTE trades to take advantage of some of the movement, because the longer term stuff, the swing trading stuff, is very difficult right now. There's huge amounts of volatility, as you can see. Ever since this drop right here, we've been dealing with the same issue. And so in all of our programs, I've slowed down the signals quite a bit. The signals that we've gone in are a real mixed bag. Some of them work out really well, some of them work out terribly. Some of them work out really, or start out working very well and then reverse completely. So that volatility is giving us a little bit of a difficult time when you're stretching it out to a longer time frame. Zero DTE, we have less of that, and it's a lot easier to manage. So I might be giving out some bonus trades, zero DTE bonus trades, because right now the swing trading, unless you can structure it properly, it's a little bit frustrating for me right now, because with single calls and puts and even verticals, it's very difficult to give you guys good results. Whereas in my portfolio, I can do whatever I want to, and I can do butterflies, broken wing butterflies, all sorts of things, and I'm doing just fine. So I'm also considering starting up in my all access program, Diamond, or whatever else they call it. I don't even, they have so many names for it. I don't know why they have so many names for it, but basically the service where you have access to every single one of my programs. I'm going to be doing some bonus small portfolio. So the idea that we talked about a couple weeks ago, where you would get to watch me grow an account and double it. So just say $5,000 to $10,000 or something like that. And then later on, when the publisher is finished vetting everything in terms of can we actually do an official program, then if the answer comes out to be yes, then I'll release something officially. That would be separate. Well, of course, all access members would still get access to that, but at least non-all access people would be able to participate as well if they wanted to. So just giving you guys an update because right now it is difficult because of that volatility. You see VIX is at 19, it's not quite above 20 like I normally say. That makes it difficult, but the realized volatility is there. It's not, there's a little bit of a decoupling of the realized volatility versus the VIX. So VIX should be a little bit higher in my opinion based on what we see the realized volatility being. Hey Illinois grain farmer, good to see you. See Fazio, Sylvia, Ralph, and Preb Nuts, good to see you guys. 74 in Galveston Bay, Texas, nice. I think it's about the same, 73, 74 where I am right now as well. Hi Spider Monkey, and Peter, Tim, PWD Duke, K, great to see you guys. Oh, Bernadette, okay, good to see you, Bernadette. All right, so we'll take a look at what's going on overall in the markets, and then we'll see if we can find some creative ways to actually safely make money. There's plenty of ways still to make money with volatility, but can you safely do it? And are there going to be outsized losses? Are things going to just flip around on you very suddenly? Well, if you're doing single calls and puts or even verticals, those can all be a challenge right now. So we might look at some butterflies, broken wing butterflies, something like that. We'll just see. And of course, I'll have to see if there's anything worth even going into at the moment. SPY pulled back down to its EMA 20. Is that enough of a pullback? Could it bounce and resume from here? We'll see. Post-market, it is a little bit lower, closer, basically right on top of that EMA 20. So let's take a look at everything else. So actually, I should probably go a little bit broader and look at TLT. TLT bouncing off of that MA 50 so far. That is better news for yields, but that's just one day. I wouldn't put too much credence in it unless we get back up above this EMA 8 and EMA 20. Look at the dollar. This is a little bit more telling. Short-term strength in the dollar approaching that MA 200 if it breaks above it. And actually, more important, when we're talking about dollar and TLT, the moving averages are less important. They're still there. We're still looking at them. But more important are the actual price action levels. And right here, you can see that where this dotted, I don't know if you can see it, it might be really thin, but these dotted line right here coincides with this top, and there's a lot of activity over here. So where we are is a very important level. If it breaks above it, the dollar could run up and actually switch from a downtrend to consolidation, and it could signal the switch to an uptrend. And a stronger dollar is going to be difficult because the SPY has been riding on this weak dollar for all year, right? So all year since beginning of January all the way till now, that was the weak dollar until here we get this little bit of strengthening, say, I guess you could say it started mid-September, but really just a couple weeks ago, last week actually. So if we look at SPY, what has it done during that time period? Well, January, other than the April dip, it's been very strong. And since last week, okay, well, we see that difficulty right there. So if that's, and then it also destroys the debasement trade. Now, Chris and I were talking about this a couple of Gamma reports ago, like, hey, we're starting to see mainstream media talk about the debasement trade. We're seeing JP Morgan Chase, Jamie Dimon talk about the debasement trade. Why is he talking about something if you got these Wall Street guys, you've got to understand that they use media as a positioning tool. So by the time they are telling you for free the information that they have on a very wide scale basis, they've already made their trades and they've already made their money. And it could be a point where they're starting to reverse that trade. So you want to be very, very careful with traditional media. So if we're starting to hear about it in the public, then the debasement trade is basically over. That's what Chris and I discussed. I believe it was 2 weeks ago. So that dollar strengthening is the end of the debasement trade. The whole premise of the debasement trade is that the US dollar keeps on going down and therefore everything else keeps on going up in price, including stocks, including gold, including silver, including Bitcoin. And what have we seen? Well, we've seen a little bit of just the little beginning signs of maybe a top in the S&P. So that's stocks. Gold hit its peak and pulled back, and we'll see. Silver did the same thing. And then if we look at Bitcoin, Bitcoin broke its MA 200 over the last few days and is significantly down in today's session. And so Bitcoin made its peak as well. So the debasement trade is over, in my opinion. Well, it's not, shouldn't even say my opinion. It's a fact. The dollar stopped going down. If it resumes, if it reverses and goes back down, then maybe the debasement trade goes back on. But at least for now, that would be a new phase or a new beginning or a new debasement trade. So the debasement trade that we've had all year, that one is over. And if it does, the US dollar does go back down, that would be a new phase or a new debasement trade. So that is giving me pause in terms of the indices. Yesterday we talked about how these moving averages are getting a little bit close together, how we didn't really have market breadth. Now I see that the debasement trade is over, and then we'll continue. We'll see if there's more signs for an argument that we're going to stall out or pull back from here, or if there are signs to the opposite. So let's go to QQQ. QQQ, not as weak as the SPY, but still very close to its EMA 20. I look at IWM. Ooh, IWM not looking good. It's broke below its MA 50. So definitely weaker than the SPY. And it's been consolidating over here. And we could say that if it continues lower, then that will be the beginning of, at the very least, a pullback, if not something more. And then what we'll see is that now that this is below the MA 50, these two shorter moving averages, the EMA 8 and the EMA 20, will much more quickly converge towards that MA 50. And that was the sign that I was telling you guys about yesterday. That was like, hey, this is sort of a topping pattern right here. So IWM is definitely in ahead of the curve in that topping pattern. And then let's look at Dow Jones. Dow Jones pulled back to its EMA 20. So looking very similar, a little bit stronger than all the other ones that we've looked at so far. If we look at RSP, and not looking good at all. So that is even further along than what we saw in IWM. Okay, so these moving averages are right on top of each other. They have been for a couple of weeks. This has been consolidating sideways a lot longer than even IWM has been since the end of July, basically, or maybe even beginning of July. And even though it did make an all-time high 2 weeks ago, barely, it's still not, it's just barely sloped upwards. So RSP is not looking good at all. That's reflecting the market breadth issue that we looked at yesterday. And then if we look at QQQE, better, stronger, definitely than RSP, but again, below its EMA 20, heading towards MA 50. It is upward sloping. It's not nearly as flat as the RSP, but still showing at least some sign of weakness. Let's take a quick look at SMH. Still looking pretty strong, this slope. Actually, I'll take that back. It is looking very similar to SPY QQQ. It is above, it's actually more like the QQQ. It's a little bit above its EMA 20. The reason why it looks stronger is that this slope is stronger. So clear consolidation right here and then upward slope. I don't think we saw that in the QQQ. Oh, we did. No, we just had a consolidation over here as well in the QQQ. And then MAGS, same thing. Okay, MAGS, same thing. Maybe looking a little bit stronger as like today exactly. It didn't have as much of a sell-off and it's not nearly as close to its EMA 20, but still they're all exhibiting the same pattern. So I'm starting to become a lot more cautious. And I am now, unlike the last couple of weeks, 2, 3, 4 weeks, I'm a lot closer to moving this to 0 neutral than I am to moving it back up to 2 bullish. So I'm not quite there yet, still slightly bullish, but we're getting there. There things are starting to pile up. Things are starting not look so great to the point where we're close to me moving this down to a neutral. And that reflects the trades that are working for me right now. And what I began saying by saying like, hey, the calls and the puts are very difficult right now. The vertical is even not doing so hot right now. But the neutral trades, the butterfly trades, the unbalanced butterfly trades, those are the ones that are performing. That is very much reflective of a neutral environment inside of the markets. So I am very close to shifting this down to a 0. That doesn't mean, remember, neutral, right? It's not bearish, right? It doesn't mean flip everything, buy a bunch of puts. No, just neutral, okay? So a lot of times we have to be very careful because if I say not this, then there can be a lot of assumptions. A lot of people tend to make a lot of assumptions. Hey, James Kwong, good to see you. And let's take a look at some sectors, okay? So we'll take a look at our normal sector view. Okay, so we still got mostly the tech stuff at the very top and biotech. Okay, so we haven't seen the whole rollover yet in terms, at least in terms of sector rotation on the longer term. So we'll want to look at a shorter term. Well, let me look real quickly at the charts. And see, that still looks bullish, still looks bullish. This is bullish, but struggling a little bit, bullish, but a bit of a pullback in aerospace and defense. Bullish, 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 bull, bull, bull with a bit of a pullback here. Maybe on the cusp, neutral. Actually, it looks like it went neutral. Went neutral. Communications, so a sector of the tech. Strong pullback right here in gold. So we'll see if it continues or if it bounces completely sideways. Here, bullish, neutral, to looking almost bearish over here in retail. Strong pullback over here in XLU as well. We'll have to see. Neutral, almost bearish, like basically bearish, on the very, very cusp of being bearish. Commodities sideways to, but maybe breaking out to the upside, which is inflationary. Healthcare, bullish. Energy, completely sideways. Materials breaking down, so that's bearish. Oil, same as energies, kind of sideways. Bonds looking bullish overall, just barely. Real estate, neutral to bearish. Agriculture, neutral for now, but maybe becoming bullish at some point. Staples, still very bearish, and that is it. Okay, so again, you're not screaming bullish for me, even though there's a lot of these that look bullish. A lot of them are also looking like they're weakening. So let's take a look at what happened today in terms of strength. Okay. So the best performing sector by far was insurance. Insurance is one of those safer havens. And even though it is a part of financials, which we did see is the second best today, but financials are not necessarily a safe haven, but the subsector of insurance is a safe haven. We do tend to see insurance companies do better when there is a downturn in the economy. So people go, for example, like Geico, like Progressive. Those are considered blue chippy type of plays, and so they are more defensive than they are speculative. Okay, so then we see staples, healthcare, very defensive sectors for the most part, showing strength, and you can see that some of it don't even count, right? This is negative, this was 0.06, so we can't really call this like strength in the market for today. So there's only a couple of sectors that sort of, well, only one that clearly went up, and the rest just maybe so-so. Okay. And if we look over here, it's completely different. We don't have in the 1 day, the 1 week, even the 1 month, we're not seeing the AI We are seeing a little bit of the cloud computing still barely hanging on. AI at the very end over here, not in the top 5 anymore. We're not really seeing solar. We are seeing solar. We're not seeing uranium. We're not seeing lithium. Those are the ones that were leading before. They are still here on the longer term, 2, 3, and 6 month. But of course, a single day isn't really going to have a huge effect on the longer term. So what we're seeing is just the beginnings of perhaps rotation out of the riskier sectors or the speculative sectors. And so that is not making me super bullish either. So we're just seeing signs of everything maybe flattening out, starting to shift, starting to move. And it's still early, but we're just beginning to see the signals of it. If I look on a weakness perspective, if we look over here, the 1 day and 1 week, uranium's right at the top. So not only did it not perform well, it was actually the biggest loser today and in the last week, a huge amount, 10% in the last week, 5.4% just today, uranium, nuclear and uranium stocks. So unfortunately, I had a trade in a uranium stock in one of my services that last week, in the first 2 days, it was up like 60, 70%. And today we had to close it out. We had to stop out of it because of this huge move downwards today. Same with metals, right? After the announcement that Trump and his administration was going to buy a big position in XM. No, was it XM? One of the mining companies, I think it's XM. And this shot up and it's been catching in bid ever since, but today it was one of the weakest. So actually, we see on a weekly basis, uranium, XME, lithium, cars, and quantum computing. These are all ones that we've seen lead in the last several months. So it looks like that is starting to reverse because especially the size of the 1 day move and the 1 week move is giving us that indication. Remember last week when I told you guys, hey, we want to sell into strength, not really into weakness because weakness can come fast. So we would have, if we were in SPY, would have wanted to sell on this day, and then the weakness came, and then it, 1 day drop, flattened out, 1 day drop again. It can come very, very quickly. So if I look at URA, yeah, you see this over the last couple of days, the drop has been fast and significant. So here more of a drift, but a sudden gap down today in XME. And lithium, same thing, just sudden gap down today in lithium. So all of that is just, everything is not as strong as it was before. And it looks like there is profit taking and money shifting out of these sectors that were doing really hot before. That is the beginning of a sign of sector rotation. Now, of course, we'll need to confirm that. We'll need it to continue to move on, to continue to go past just 1 week and start bleeding into 1 month, 2 month, 3 month. But obviously that's a long, that can take several days. That could take several weeks for it to show up on the longer term. So we just have to be aware that it appears that maybe that this sector rotation is beginning. So overall, yeah, I'm not, again, I'm leaning a lot closer to neutral now and a lot less towards upgrading this to bullish. All right, let's see. IAK held up well. IAK is insurance, I believe. Yeah, insurance ETF. Well, it bounced. I wouldn't say it's definitely not bullish yet, but it definitely had a very strong day today. Bounced it up into resistance. We'll see, but yeah, we'll see. What was my ticker for insurance? KIE. That's blanking for a second there. KIE. Yeah, and KIE basically looks the exact same, right? But if we look at individual stocks, like I was looking at Aflac. Okay, Aflac has earnings, which is why I didn't do anything, but bounce off of the MA200, poking its head above its MA50 today, that's starting to look like a change of trend, right? Break above the MA200, retest it, bounce. Okay, now that looks like a bull trend, but it pulled back all the way back to the MA200 to test it again and was able to get back up above its MA50. We'll see what happens with earnings, but that's starting to look a little bullish. Look at Progressive. Okay, that was in a downtrend, now bouncing up to resistance. So we'll need several more days to see if this looks like a change of trend for Progressive, AIG. I'm blanking on. So AIG retesting its MA200 right before earnings. So we'll see. There, it looks like earnings is going to affect this as well. Several groups or several stocks reporting earnings looks like pretty soon here. Hi, Chidori. Thank you for the clarification on neutral doesn't mean buy boatload of puts. Yeah, that's right. That's right, Stephen. Neutral doesn't mean buy boatload of puts. Hey, Bob Blaine. Gaston, can you go over crypto? There's been quite a flush out. Sure. We'll take a quick look at BTC USD. That'll be Bitcoin. You can see that it did break its MA200 a couple of times over here. It was struggling. It was maybe thinking that we could hang on to this, but yesterday and today clearly downwards. And so this is a clear change of trend, at least in the short term. Now, we do have right there, right where it ended today, or basically where it ended today, is a bit of support. And then we've got some right there. And then we've got some down here. That's pretty clear. And then we've got some right there. Not as much, but 90,000, 85,000. Okay. So in the short term, Bitcoin itself is not looking great. If you're looking longer term, though, hey, a pullback to 85,000 or even to 65,000, that would be Bitcoin on sale. Okay, and here's why I say that. Oh, 45,000 looks like as well, maybe even 55,000. So never in history, and never, in my opinion, will there ever be a nation that backs a currency that is not under its control. Okay, but what we've seen since the Donald Trump took office is a wave of legislation that is crypto favorable and even support of Bitcoin itself. So that means that there's some sort of plan. I don't know what that plan is. I did over the last few weeks during my travels, I did talk to people who have a lot better connections than I do inside the crypto world and the talks and the things that go on. And again, there does seem to be a plan in place for cryptos in the United States because they've been so friendly to the crypto space, which is partially responsible for this run up right here in earlier this year. We ran up to all-time highs because of all of that legislation. So there's a plan for it. If there's a plan for it and it's backed by at least some elements of the US government, then long term it's probably okay. Just like what people piled into MP when the US government said they were going to buy some of its shares, and then I don't remember which lithium stock and a couple other stocks as well. That was a huge bull signal, and it provides a floor. So even if Bitcoin pulls back to 85,000, in the context of things, that is okay, right? And even over here to 65 or 55,000, it's not like here that would be a significant pullback, but that would be Bitcoin on sale. It wouldn't be dump everything because it's going to go even lower down to 18,000 or 5,000, right? That's not what we would expect. So short-term pain in cryptos and Bitcoin, at least from the Bitcoin perspective. I can take a look at, I'll just remove all of this. I can take a look at Ethereum as well. Yeah, same thing. Well, not quite there yet, but you can see that this is a drift lower. And then it broke the MA200 today. So Ethereum down to 2,700 to 2,400 to 2,200 would be areas of support that I personally would be willing to buy. If I was taking a long-term stake in Ethereum, I would be willing to buy at those levels. And even down here at 1,600. Yeah, 1,600 would be strong support. So yeah, Ethereum, USD, Bitcoin, any altcoin is not going to do well during this period if there is a broader Ethereum and Bitcoin pullback or short-term bear market. Okay. And it's just not something that people are used to because there hasn't really been a bear market in Bitcoin. There was right here in 2022 to 2023. That's really the only bear market that Bitcoin has seen. So people who haven't been around for a while and have never experienced bear markets before, they're gonna see a lot of pain because they're not gonna know what to do with this. But for now, short term, not looking super great. And again, this is part of the reverse debasement trade. Right? We saw that dollar getting stronger. So if the dollar suddenly reverses and comes back down, then we don't have to worry about any of this. So DXY. So if we see this hit that MA200 and come back down to these levels right here, then Bitcoin is most likely going to just recover right back up above its MA200. So we don't want to read too much into this and draw too many conclusions, but in its current movement and its current trend, it does look short-term downwards. The thing that could rescue it is the dollar coming back down, dollar weakness. Okay, AMD reports 97 cents and expected to be $1.17 earnings per share. Okay, let's take a quick look at AMD. Okay, post-market down a little bit, not a huge amount, at the lows of today. So far, not a huge impact on AMD. That, of course, could change in the next few hours or by tomorrow morning. I don't know what else is reporting, but AMD is pretty big. It is in SMH, and it is a big player in that AI space. So it does have potential if nothing else is going on, and if we don't have other major earnings to offset it, to bring the market down a little bit lower. Let's see. AppLovin, Qualcomm, ARM, Hood, MCK. There's a lot reporting. So there's a lot that could offset that or exacerbate it. Okay. All right, so what would we be comfortable doing right now? Not a lot. I definitely don't want to be super long. I might consider some shorts. Yeah, I might consider some shorts. So let's take a look. Just remember, we're in a neutral space, and if I have longs in my portfolio anyway, and I want to start neutralizing it, then it makes sense to take some shorts. Or I could just directly take some neutral positions. So we haven't looked at shorts in months because of this crazy bull market. So it could be good to take a look at some shorts right now. Let's go stock fetcher. I'm just going to look in the S&P 500. I'll do it visually instead of filters and whatnot. Okay, so FMC definitely showing weakness, but it's potentially overextended here. Same with this sudden gap down. A lot of these had earnings recently, so it makes it a little bit trickier as well. Okay, so clear downtrend here. Brown and Brown, insurance broker. FactSet. I kind of like FactSet from this view. I'll have to look at it a little bit closer, but FactSet. Charter. Maybe Enphase. CarMax. Copart. Let's just start with those. Let me make a note of these. So FDS, I think, was FactSet. Yeah, FDS. Charter. Maybe Enphase. CarMax. And CPRT. All right, let's take a look at those. FDS. Be more comfortable on a pullback, but this is definitely, this bar right here was a breakdown, and then we're just floating lower. So this is a candidate for unbalanced butterfly. I'll just make a note of that. Charter. Clear movement, but had earnings basically 2 sessions ago. I'd rather give it a little bit more time. But you know what? That could be okay for a unbalanced butterfly as well. Enphase, same thing. Might be okay for unbalanced butterfly. But I'd rather... it's okay. We'll just leave it on the list. KMX. KMX is looking pretty good. CPRT. Rob is saying SFM. Copart has earnings coming up. SFM. I'd rather wait for a gap fill before going short SFM. It does have potential. So what we see here is normally the day of the session after earnings is a high volatile day and a large range day generally, if you include the gap. Okay, and even oftentimes the day session, the range as well, is quite large, is quite significant. So here, what we see is that the high and low, and generally you get inside days for a period of time, and then it'll break either above or below. And in this case, we had an inside day for 1 day, and then it broke above it, above the high of the post earnings session, and sort of continued today. At least it tried to continue today, and ended up in pretty much the same place where it was yesterday. So this does have gap fill potential, at least halfway, or to that EMA 8, which would be roughly halfway between this gap. And that would be a better place for it to be shorted. Or it could just chop around for a bit, and that EMA 8 would come down, and then we would short it. In which case that makes a good unbalanced butterfly, but this gap between the EMA 8 and the current level makes the unbalanced butterfly a little less profitable. You would have to account for that in your safety margin, which means you got to make it a lot wider. and then it's not as lucrative. Yeah. I have a short position on XLF. From what I remember, it looked a little choppy. Yeah, and it does, the MA200 is somewhat close by. So it is in a short-term downtrend, but it is limited to its downside by MA200. Okay, which is also this right here. Okay, this is a strong horizontal support, okay, which happens to be at the MA200. So you've got 2 points of confluence at the same area in terms of support. So if you got in recently near that EMA8 down here, yeah, that can be pretty lucrative. But just be aware that there's support somewhat nearby. Right now it's at 52.47 or 42. Support at 51.25, so $1.15-ish of room right there. So $1.15 on 51, that's roughly 2%. Yeah, you can make a decent profit on that move. Just be aware that once it hits this, that could be support. It could bounce right off. It could spend some time right there. It would be a while before it could break below. It wouldn't just move right through it in most cases. Okay, so I sort of like FDS, Charter, CHR. Charter just had earnings, so it had a volatility collapse, which means that it could hang around here for a while. Same with Enphase. Further away from its EMA8 though, Charter. A little far from CMA8 as well, KMX. All right, let's do something on KMX, theoretically. Okay, I'm not gonna do this as a bonus trade or anything because it's after markets. So this is theoretical. So do a long put butterfly on KMX. It only has monthlies. Okay, so we'll try the November 21st. Currently at 40.75, it's got resistance at roughly 42.5 and 44. Okay, so if in the next week this would be 2.5 weeks. Debit is 950. That's a little. So 50 bucks on, call it 1,000. That's not great. That's like 5%. Okay, not loving KMX. Let's try Copart. Okay, so that's 44. Huh, roughly the same price as KMX. Let's see. So 44, we got this at 42.5. Okay, if we go down here, could potentially make the same 50 bucks on 1,000, but let's see, that you'd have to move below 40. That's pretty far away. Oh, it has earnings though. All right, so no on Copart. Let's take a look at Enphase. Hey, Kevin. Sure, I can go over that, Kevin. We'll finish this and then we'll go over that. Okay. Okay, so this is looking like it could be a lot better. So Over here, if it goes below 27, I can still make 42.50 on 257. That's roughly a little over 20%. So if I go 42 point, what was it, 42.5 divided by 257.5, okay, 16.5%. I guess my math was a little a little off, a little below 20%, not above 20%. That's not too bad. Okay, we have a roughly 1-to-1 on the max. That's not too bad. And then if we go a little bit closer, then we shift that as not quite 1-to-1. That's actually only about 66% on the at the peak, and then 100 versus about 33% if you go below 28. So let's take a look at those two levels. Just from those numbers, those ratios, I like this one better, the first one. But we'll see where 27 is and where 28 is. Oh wait, that's the wrong in phase. Okay, so 27 looks just fine. 28, meh. We're talking about a week and a half, 2.5 weeks. Let's try a week and a half. No, I like that 2.5 weeks. Okay, we got a break even at 31.43 on that 27. Okay, which is pretty close to that EMA 8. So this would be a unbalanced butterfly, where if it just bounces around and doesn't really go anywhere, just kind of floats around here and consolidates because it's gotten a little bit far away from its EMA 8, then you have quite large profit potential. But if it just keeps on going down, then you can make 16-17% in a week and a half, call it 10 days. So that's 1.6% per day. That's pretty good. That's a pretty good return on an income style trade, okay, a neutral income style trade. So that's how I would build out a broken wing butterfly on Enphase. Okay, so let's, yes, Rob, it is normal to be a little bit more difficult to get in and out of butterflies, one, because you have more legs, but more importantly, it depends on how you structure it. Because, for example, this Enphase one, you can see that OptionStrat is complaining that this one has a wide bid-ask spread and low volume. Okay, so let's take a look at that. So the wider your bid-ask spread is, the more difficult more difficult it is to get in and out of it. So if I look at Enphase, we did November 21st, and then we did the 27, 29, 34. So if I look at 27, you can see that's a 7-cent bid-ask spread, not a big deal. That's nice and tight, okay? Then we did, what was it, 29? Yeah, 29. 29, 10-cent bid-ask spread on $1.50. That's just fine. The problem here is this right here, 43, or it's $1.10 wide, okay? So you're gonna have difficulty, and I always work butterflies. I always work them, because even if this was also 10 cents, then you say, okay, there's a 10-cent bid-ask right here, there's a 10-cent bid-ask right here, and then there is a 7-cent bid-ask right here. So you're looking at 10 plus 20 because you're operating two of these. So that's 30, and then 7 cents, 37 cents bid-ask spread, which means that your distance at the mid has almost 20 cents on either side of it. Right? So that is why the markets are not nearly as tight when you start piling up the legs inside of a spread, and especially if you're going in the money. In the money tends to be a lot less liquid. So for example, if I go way down here, so like over here to 36, that's a $3.50 bid-ask spread on, who knows, like $5 to $9. That's a huge range. So it adds up inside of a spread, and that makes it more difficult to trade. So it's going to make it more difficult to get out as well. And so you always have to work it. You never go, hey, enter right at the mid and hope that it gets filled. I would always go a lot closer to that bid if I'm doing a debit butterfly, and start working it slowly towards the mid. And I may accept slightly worse than the mid, but not significantly worse than the mid. And what you'll see is that as you work it, some market makers change their bid-ask spreads, and you may see that mid creep up as you're creeping yours up. So it's a judgment call. And you're probably going to experience that on the way out as well, unless you just let everything expire. So you have to be aware of that. Butterflies are a little bit trickier to trade and get in and out of. Okay, so Kevin asked if I could go through my thought process this morning when I said the market opened low. It looked like it was going to open low. I said this to my morning payout people. I said, look, it looks like the SPY is going to gap down on open, and it's going to gap down right into support, which it did. Actually, a little bit above support. So it opened at 676.11, and that EMA 20 was roughly 674.52. Okay, so we were $1.50 away from that EMA 20. And so what I said is we had a trade on where at the open there was a loss, a significant loss. And so I have to ask myself, do I just take that loss, or is there a strong probability for recovery? And I treat it just like a new trade. If I enter right here, how much worse could it get versus how much better could it get? So if I enter a new trade right here, right at the open, how much worse could it get before I accept, hey, I'm just out? Well, I can do a really tight stop then, because I have that EMA 20 right there. I could do right here, but I also have these highs right here, okay? So I could say, okay, well, we let it go down to as low as 673. And my potential, what's my potential? Well, based on the gamma exposure that I shared with you guys at the very beginning of this call, we were thinking that it could hit 680. Okay, so if I go and I do this, okay, so if I do that, what I see is a 1.26 to 1 reward risk. But I don't necessarily have to accept that. I can make it a little bit tighter right here, and I can use these highs right here instead of these highs right here. And so that put it at 675, 675.24, and that's a 1.83 to 1 reward risk ratio. So I could suffer, I'm already suffering a large loss. I could suffer a tiny bit more for the, what that buys me, taking on that extra risk buys me a large recovery. So instead of taking a potentially roughly 50% loss, this recovery represented to us a roughly potential 10 to 15% loss. So I'm gaining that 35, just call it 35%, gaining, even though it's a loss, I'm recovering 35%. And if you looked at the curve of the trade that we had, this movement downwards to this new stop loss below the EMA 20 would be just a few percentage points, okay? Because we were in a diagonal, meaning that it wasn't a linear drop off, right? It wasn't a linear drop off. It was like this, okay? Sorry, it was like, Yeah, it was like that. Okay. So the downward movement, here, let me redraw that. I'll draw it left to right. A little bit easier for me to draw. Okay. It was like this. Okay. That's what it looks like. So here, if I'm down here, okay, I've suffered potentially on paper unrealized 50% loss. Well, moving even a lot lower means just a very small amount of downward movement. But moving just a little bit higher, okay, or sorry, a little bit higher this way represents quite a bit of recovery. So the recovery to additional loss ratio was very high. And so it made it worth it to say, hey, let me not close out right at the open and let me see if this is actually going to recover up to 680. And we came very, it went to 679.96 and I pulled the trigger at 679.6-ish. Okay, so I left a little bit on the table because you can never be, you're never going to catch the exact top or exact bottom on anything. And I said, you know what, at this point, at the point where I was 30, 40 cents away from my presumed peak, at that point, now I have a different reward risk ratio, right? So if I do this and say, I could wait for it to go another 30, 40 cents up and make an additional 3 or 5%, or it could bounce hard back here and head back down. And then I'll be right back at that 50%, 60% loss now, because now there you have time value eroded between then and now. And it was 0 DTE at that point. So that now the reward risk ratio doesn't make sense anymore to hang on for 20 more cents for a couple more percent recovery versus what I could lose everything that I had gained back already. And so I said, let's go ahead and exit at that point. Okay. Does that make sense? Hopefully that makes sense, the evaluation of risk to reward. It was a great recovery. So 8-day EMA was the target. No, 680 was my target. 8-day EMA just happened to be very close to it. So, and they basically coincided. So confluence made a difference. So if I look over here, okay, we were still below the 8-day EMA at that point. We came pretty close, but not visually at that point. You would not have said that it was that close. Where's my replay? There we go. Okay, so I gave the exit signal right, I think right about there. Okay. Either one of these two bars. I see it move up, flatten out, another push up, flatten out. Okay, at that point in time, I guess at that point in time, the EMA 8 was right there. So I don't know. I don't know necessarily that it can make it all the way 8 to, yeah, I gave it at the peak of this bar right here. 679.6-ish, right? 6660, around that point in time, I gave that exit. I said, okay, well, now I'm seeing signs of topping. I've seen signs of resistance. I mean, it's pretty close to that 680 target that we got from the gamma levels. So there's nothing here that assures me that we're actually going to get to 680. And so now the reward risk ratio, it is heavily on the risk side that I'm going to give it all back up. So we just exit at that point in time. Okay, and it just turned out that a little bit later, it did go to just 4 cents shy of the target that I defined originally. Okay, all right. So any more questions? We're just a couple minutes away from our time, but I think that was pretty complete. So we got a few good subjects in. Thank you for sharing out. Yeah, you're very welcome. Happy to do it. Happy to do it. I thought you were going for 8-day. There is my answer. The gamma level 680 gave you. Yep, yep, that's right. Uh, Gamma. There's no on any given day. There's not necessarily on a daily. Obviously, EMA 8 is an important level, and that's why I do have it on my intraday charts right here. But there's no that by itself, because this range is so large. There's no assurance that it could actually make it up there in a single day. Yeah, we had volatility, and that would have given me a clue that it was potentially possible. But the gamma is what gave me the most confidence that we could get there. Has the high ATR make it difficult to pin levels? Volatility definitely makes it harder to pin levels. Yes, for sure. Yeah. But instead of a pin, you can just use a wider range, because if you have higher VIX, then you should be compensated anyways. So you would just choose a wider range. Great explanation with the graph. Oh, thank you, PWD Duke. And you're welcome, Tim. Okay, we're going to wrap it up. That's it for today. All right, have a great rest of your evenings, and I will see you guys tomorrow.